All right. Hey, we're going to talk about the all-important jobs number. The all-important jobs number is coming out in just a few minutes. We're going to talk about that in today's episode, plus Zillow. Could there be some rocky road for Zillow in the future? And what does that mean, especially for buyer agents? We're also going to talk about the still impending crisis in commercial real estate. It is starting to affect property values in large cities, and that means loss of tax revenue, and then you get the death spiral going. Got to talk about that. Very important issues, and a couple of other lawsuit things, updates in the real estate world. I am Jack from Jack Gately Real Estate and the Online Real Estate Academy. Welcome to Jobs Friday. Thank you so much for joining us today, and it is great to have Sharon with us. Good morning, Sharon. Hi, how are you? Sharon's joining us from Cape Cod, and I'm broadcasting to you from beautiful Plymouth, America's hometown. So the jobs data, the all-important non-farm payrolls come out in just a few minutes, and we're going to join CNBC Live. We'll have Rick Santelli give us the data live here on this show. And this is a very important jobs data coming out. After last month, you might remember it surprised to the far upside, printing at like 353,000 or something like that. The expectation for the jobs data that's coming out in just a few minutes is 198. 198. That is the expectation. This will be followed next week with the consumer price index data. That'll be on Tuesday. And then I think the producer price index data, that'll be, I think, on Wednesday. So we have a number of very important economic data points today, the jobs number, and then basically inflation numbers next week. And from there, we'll have an idea of how the market is going to price, because I know that the vast majority of our audience is in the real estate business one way or the other, how the market is going to price mortgages. So let's take a quick look at the expectations for this jobs number, which is definitely the top story today. Friday's non-farm payrolls report is expected to show, as I said, 198 and a steady unemployment rate at 3.7. A hot jobs market could deter the Federal Reserve from cutting interest rates this year as expected. So if we get a number which is significantly higher than the 198, then that means probably that interest rates will go up. If we get a number that's significantly lower than the 198, then that means interest rates will probably go down. Where are the market this morning? The market this morning is pretty much red across the board. Usually when we have a big data point like this, you don't see a heck of a lot of market movement in the day of or the day before. The Treasury, you'll know the 10-year Treasury, which of course tracks the or has a significant alignment with mortgage rates. Basically, mortgage rates flow from the 10-year Treasury. That slid down, right? Remember, it was up to 4.3. That's because right now, if we go to Mortgage News Daily, mortgage rates have slipped a little bit. Look at that. That's good news for a lot of people. Down to 6.9. Or 6.92, I should say. If we look at the 30-year chart on that, you can see how it, if we look at the blue line, we were up to 7.1 for about a week ago or so. And now we slid down a little bit, just a little bit under the 7% mark. So you would think that would be good for the spring market and everything. Although when you see the interest rates go down, then prices go up, so there's that for the whole affordability aspect, which we're definitely going to talk about later into the show. I want to go over and take a little look at, which was something we usually don't do, but Mortgage News Daily posted a very interesting note here, as they do on a daily basis. 10-year yields are now decisively below the levels seen before the last CPI report. So if this jobs number surprises us to the upside, you see all the gains that we've had in the last couple of days or a week or whatever disappear fairly quickly. More importantly, there's a legitimate belief that the economy is not at risk of reigniting inflation concerns. I don't share that confidence. I think with our borrowing from the federal government that we are at risk of reigniting our inflation concerns, but we will see. The Wall Street Journal today, the jobs report, along with last night's State of the Union, is the top story. And, of course, this month's Fed expectation is for no cuts. Let's see if we can bring up Rick Santelli here.
State of the Union address last night, Rick?
Report jobs imminent.
Oh, yeah. I could barely stay awake during the address, much less, I got more rest than you think.
All right. So, Jason, anything?
Listen, we got to
Telly
watch.
just
Listen,
kinda-
real quick.
I don't
real
want.
quickly.
I'm
We
trying
have
to
to
make
watch
this a
average work week.
trying to make this a State of the Union free episode, but I guess I missed out on that, Rick Santelli. All right, here it is. The job report is going to be any moment now. I did not watch the speech. Let's just put it that way.
All right, Rick, just keep talking because you're going to have the numbers. You just can lead right into those numbers. We had a hot wage component of ADP. Is that going to happen again?
Yeah, no, I think that's really important because if you consider the unemployment rate, how low it is, and you look at average hourly earnings, that 3.4 to find a low, or 3.1 to find a lower one, you're going back a number of years. You're going back to March of 2020. All right, I hear the music, and here are the numbers for the February jobs report. First of all, on revisions, we lost nearly 170,000. Non-farm payrolls, a stronger than expected 275,000. Well, you compare it to last month, that was 353,000. That was the best in a year going back to Jan of 23, comparable to 482,000. If you look at the unemployment rate, it took a jump to 3.9. 3.9. The last time we had an unemployment rate anywhere near there, you'd have to go to 4% in January of 22. So let's call it a little over 2 years. That is significant. Now, if we look at average hourly earnings, that was one of the big deals last month. We saw a 0.6 jump. That was the best in 2 years. That gets modified to only up 0.5%, but it's still comping back into the history. And finally, if you look at the revision there, what's the new number? The new number is much more in line, only up a 10. These are the strange effects we saw in January. 0.1, okay, comps to, well, the last time we were there would equal February of 22 to find a lower number. You would have to go all the way back to March of 21, Joe, when it was 0, unchanged. Now, if we take a year-over-year perspective on earnings, our last look was also juiced at 4.5%. That was the best since July of 20.
All right, so the one thing that I did not hear from Rick, but it seems like there was a revision from last month's numbers, which was 353, and I think he said it went down 170,000. What was that number?
Threes at the end of last year. To find a lower one, you're going all the way back to June of 21 to find a 3.9. Finally, here we go. Average weekly hours last week at 34.1. That was the lowest level since March of 2020. Jumps back up to 34.3. 34.3 is the way we finished last year. To find a higher one, you go to November of last year at 34.4. Participation rate, also in January, maybe a bit of anomaly. It popped last week in the wrong direction. It went up to 6.5. It went down to 62.5. That was pretty good. You'd have to go back a year to find a lower one. What is it now? Well,
I think the market initial reaction is going to be a little confused because we have a very high jobs number, but also unemployment went up. These are like contradictory numbers.
Percent, the highest since Dec of 21. It moved higher to 7.3. 7.3 equals Dec of 21, our original comp. Now we have to go back a month to November of 21 when it was at 7.7. Interest rates shot up Then they shot right back down. So basically, if you look at a 10-year, 10-year was at 405 before the numbers. It shot up all the way as high as 412. It's back to 405. A 2-year yield right now is at 445. It was at 447 before the number. So the pop in this, of course, is the strength in jobs. Some of the other numbers coming back in line, as we have discussed, really push yields back down. This is the third, going to be the fourth consecutive session. We're trading below the previous session's lows, but that was a big spike. We want to see how a Friday, culminating a very big week for dropping yields, over a month low yield close yesterday in 10s and nearly a month in 2s. Well, that's it, folks. Joe.
All right. So, wow, that is a big number. I don't know if you just saw that. They just flashed that on the screen. Last month's number was 353. They just revised that down to 229. There's a lot of joke about the consumer price index being called the CP lie. And now these jobs numbers, the job numbers are the job lie, right? I don't know. Somebody come up with something clever to say there. But if you report last month 353 and then you revise it down to 229, how can anybody really believe that? That's like this is total BS. And if you take the same proportionality to that, you look at 275 this month, you got to expect that that's also going to be revised down to probably like 200,000, which was the ultimate expectation. Back to Steve Leisman.
You have to take this with a grain of salt. I don't think it's crazy to think you're somewhere in the 150 to 200,000 range. So it's okay. The participation rate remains okay. So I would say, look at long-term unemployed. You did not get a spike there, 1.2. You did not get a spike in those working part-time for economic reasons. What I wrote down here was construction manufacturing down 4,000, service sector up 200,000, retail doing well, up almost 19,000 with 17,000 in general merchandise. Transportation and warehousing, an area I thought might be losing workers because I thought they might be overhired, still up 20,000. And then the big numbers, education and health up 85 and leisure and hospitality up 58. So,
all right, when education and health is up, understand that education and health is almost all government workers, almost exclusively, either directly or indirectly. When those factors are, or when those sectors are the ones that are the biggest gainers, that's a larger concern for the economy.
I think they would like to see the job number moderate.
Sarah, did you see anything that would change your outlook, or what were the most important salient features?
We'll listen to Sarah and then we'll cut away.
I think this is a win for the bulls and for those who believe in a soft landing narrative. It's showing that the labor market is slowly coming back into balance. We saw that with revisions. January obviously was an anomaly. A wage inflation starting to moderate, and flat labor force participation is good news. It's keeping people in the workforce. Now, the question is, what does the market do from here after this huge run we've seen since Halloween? I think we need two things for the market to broaden out. Number one, 10-year yields to continue to moderate, which we are seeing. That's good news. But second is earnings growth. If you look at fourth quarter earnings.
All right, I'm done with that. Like, how can you possibly believe that these numbers, I don't buy what she's just saying there, because how can you possibly believe that these numbers will not again yet be revised? We've seen so much data from the federal government be revised that it's like, it's just their mode of operandus. People trade on the headline figure, and then a month later they just change it to something different, whether it's the CPI, the unemployment, or the jobs. There's a lot of revisions going on, and it just seems to be definitely a little bit of a lie. All right, so again, when we look at interest rate expectations, so here's the Fed Watch tool. Basically, no one expects a cut in March. No one expects a cut in March. May, remember, we only have 4 more meetings. So after this one in March, there's only 4 more meetings before the election. May, June, July, and September. No meeting in October. May, June, July, and how are we going to get 6 rate cuts out of that? I don't see that happening. And they continue just to kind of move the goalposts, right? Well, we're not quite yet ready, and they just kind of move the goalposts time after time after time. But of course, it is an election year, and I sure hope that has nothing to do with how these job number figures are constantly revised over and over and over again. I told you I wanted to make this a State of the Union free episode, but I will say that the president did mention affordability as a huge issue last night. And I got to tell you, before the speech, I went to a local candidate. They were announcing for office here in beautiful Plymouth, America's hometown. Come see our rock. And they said, hi, I'm so-and-so, and I'm running for office, blah, blah, blah. And the first issue of substance they mentioned was affordability. This affordability issue is polling very well. And let me just ask you, affordability polling very well, real estate professionals not polling very, very well. This is an environment where, change can happen. And there's a lot of that on the horizon. I think you're going to see a lot of real estate sector bashing, and because it's an election year, right? Or the silly season, as when I used to work in politics. So it's the silly season, and there's a lot of political points to be made. When you have local candidates saying it's the number one issue, and then you literally have the president dedicating time in his State of the Union speech, it's a huge issue, this affordability issue. So I want to shift gears and be glad to take your comments. Oh, let's take that first, because we have a comment from my good friend in New Hampshire, Bill Bedingfield. In general, headlines have no accuracy. They have become merely clickbait. Yeah, but not this episode, Bill, right? Not this show. I would never put up any clickbait thumbnail, Bill. Nobody ever remembers the adjusted number. That is true. Although we're going to remember it this time, because this is a huge adjustment, 353 down to 229. But you're right. Everyone just trades on the top line number. I don't know if that's a factor of just, as Americans, we're just not that super interested, or the huge, I'm sure there's some PhD somewhere in some university is studying this, or the huge retail investor aspect of it, or it's just like, let's go along with the crowd mentality. I don't know what drives that. But the way I look at these numbers that came out today, we beat the jobs number by 77,000 on that number. But the unemployment number went up. So to the best of the way I look at that is those are contradictory, right? And it is kind of weird. Like, how can you take this very hefty government report, Bill, and in nanoseconds make a trading decision off of it, right? Or make a strategic decision off of it. But that's what the market does, of course. All right, so I want to talk a little bit about this semi-crisis in commercial real estate. This headline that I'm going to show you today could probably be repeated in any number of cities across the country, but we'll take it from Boston. Boston faces a $1.5 billion shortfall from declining property taxes, report warns. So as you might know, for a wide number of reasons, but most certainly the whole virus situation and crime, transportation, especially in Boston, the rapid transit, just a train wreck, no pun intended. It's a literal train wreck. Vacancy rates, especially the virus, right? Vacants, work from home, have gone through the roof. And so from Resi Club, my favorite new website, as it should be yours, still not sponsored, Boston is listed here near the bottom. We went from basically, let's call it 9% vacancy to 14.5% vacancy. Look at San Francisco, 5% vacancy to 25% vacancy. San Jose, which is effectively a suburb, 9.5% to 20% vacancy. Austin, 7 to 20. Seattle, 7 to 19. These are devastating numbers. And when you look at these numbers, you start to get into what they call the death spiral. Like, everyone's leaving. And so I should too. There's a talent drain. Massachusetts, for instance, we lost population net to other states. We actually gained population. Anybody want to just guess how does a state, if it loses population net to the other states, how does it actually gain population? Bueller, can someone, I'll give you a second to think about that. We gained population, but not from other states. How did we actually gain population? Maybe someone can figure that out. I'm the exception, remembering the data revision. Well, I'll probably forget tomorrow, Bill. So the answer is we gained population because of the border policy from the current administration. All right, so let's take a look at
some pretty big concerns in the
commercial
financial
real
sector.
estate.
Our next guest is expecting what he calls a slow-moving train wreck for regional banks. Joining us right now is Scott.
Now, again, why is this? This is mostly a residential real estate show. But if there's a crash in regional banks like there was last March, you might remember that made a huge difference because the Fed pumped a giant amount of liquidity into the system and interest rates went lower.
Scott Reckler, he's RXR Realty chairman and CEO. He's also on the New York Fed's board of directors. And Scott, it's good to see you.
It's great to be here, Becky. Thanks.
All right, let's talk about the concerns you lay out in this white paper. You are looking at this and how much is coming due in these loans in this year?
So, there's $1 trillion of commercial real estate loans that are coming due this year. And even when I was here last year, I talked about this sort of slow moving train wreck. I think what happened is the train never left the station. And part of that was, there was this lack of acceptance, and people wanted to see if there was going to be an injection of capital that maybe, lifted all values. And I think now there's a recognition that's not happening. And then we also had a bank loan term program that was put in place. That was a little bit like a shock absorber, and that comes due next week. Right. So I think the problems haven't been dealt with. That's the challenge, right? And there's this triple whammy of challenges that get exacerbated as if you believe interest rates are going to be higher for longer, it's going to weigh down on it, right? Higher interest rates means that the loans that were done when interest rates were low are going to have to be refinanced at higher rates, which are out of balance. At the same time, you have the regulators in on the banks now very, very focused on their commercial real estate exposure, trying to, reduce that exposure so that.
And this also, obviously, if you're in one of these cities here, don't think that this is just isolated to the commercial real estate, because those people that work in the office towers, if they don't have to work in the office towers, then they might not have to live in those expensive suburbs anymore either. They could move to places like, where the number one place for Massachusetts residents is to move? This actually came as some surprise, but it's been this way since like 2020, the last 4 or 5 years or so. I was kind of shocked by this. It's Portland, Maine. So you can, I know where it's colder, right? Who would do that? But apparently that's the number one decision because Maine's a nice place, and it's also a lot less expensive. And so not only is this a commercial real estate problem, mid-cap bank problem, a downtown tax revenue problem, but it's also a concern for residential real estate. And all of that obviously means winners and losers. And whenever there's winners and losers, there's opportunity. William asks, thank you, William. Jack, what is the decline in what is the solution? Convert that office space to residential use. There's been a lot of that recently, but there are many properties that the floor plate is too big and there's not enough interior light. So from an architectural challenge, depending upon the local regulations, that can be very, very difficult. It's one thing to be, in the interior of one of these giant office towers and be working there 9 to 5 with fluorescent light, but to have no exterior sunlight in your residential space, that can be difficult for a lot of these office places. So thank you very much for that question. I'm guessing the birth rate because of work from home, Uber, that might be true. The birth rate might be up or down. Might be up. The answer was it's an increase. I get it, Uber. I get it, Uber Realty. Massachusetts population went up not because of an increased birth rate. It went up. Sharon got it because of the open border. Because of the open population in Massachusetts actually went up. Net increase because of the open border, not because of we gained population from other states, because we didn't. All right, so keep an eye on that commercial real estate sector. The real estate agency, I don't know if I like the name, but whatever, posts big gains on agent count, revenue, and transactions. But the real story here is, even with a large bump in revenue, just can't get my head around that name, ended the year with a loss of more than $27 million, which exceeded its losses in 2022. So we lost more money than we did the year before, but we still get a big positive headline in the real estate news media. That makes a lot of sense, right? Perfect. That makes a lot of sense. All right, so Zillow. A lot of you have advertised on Zillow. If you're an agent out there, I have never advertised on Zillow. I have probably, like you, inquired and then was pestered. Like, ever get the Zillow calls? If you ever inquire at Zillow, how much would it be for a zip code? And, they never stop calling. It's brutal. And you know what I'm talking about if you've been. So Spruce Point Capital has basically come out and shorted Zillow stock. And the reason why they've done this is because they think that buyer agents who send a lot of money to Zillow to advertise, buyer agents are going to be under a lot of pressure because of the legal concerns. Spruce Point believes Zillow is a mature business under increasing pressures with recent failed growth opportunities, like the whole iBuyer thing, which was a disaster based upon the Zillow, that illustrate management is incapable of innovating and delivering on goals as Zillow quietly retracts 2025 revenue targets. They are under a lot of pressure from CoStar Group, which owns apartments.com. You've seen those ads, and owns homes.com. Now, I know you've seen the Jeff Goldblum apartments ads, right? Now, homes.com is turning out $1 billion. You may have seen their Super Bowl ad. Maybe we'll bring up their Super Bowl ad here. Homes.com, here it is putting out $1 billion to advertise. This is a very interesting ad. Let's unmute it and hit play.
This will be a gold mine of local intel, just you wait.
Right. So tell us about this corn festival.
Oh, you got your corn pudding, you got your corn chowder.
So is it safe?
One of the reasons I like this ad is I actually grew up in a town that had a corn festival. So, like, when I heard this, I was like, whoa, they're talking. It was an annual thing. Don't make fun of me. I grew up in a small little agricultural town, which is now they got rid of all the farms and put up houses, right? Paved over a parking lot. We put all the trees in the tree museum. Not a joke.
This will be a gold mine of local intel, just you wait.
Right. So tell us about this corn festival.
Oh, you got your corn pudding, you got your corn chowder.
So is it safe around here?
Sometimes.
If a family of 8 were to need a cold plunge, where would they find it?
Oh, then they dip it in butter and bam, it goes right. Really cute vampire bar, like the Reverend does, like a blessing on the corn.
Donut shops. How far from here?
No eyebrows?
Think of how light it'll feel in the summer. We gotta run. 11,000 more neighborhoods to go.
So what's really interesting about this ad is that they don't show you a home. There's not one home in the ad. And there's also not one real estate agent in the ad either, right? This is a big change from like the NAR ad. Remember the NAR ad we saw that came out in this January, I believe it was, where it's the nice agent. They're meeting at the house with the couple that's expecting the baby. No, instead in this ad, they're going to hair salons to kind of get the scoop on what it's like to live in that particular neighborhood. It's humorous. It is a different kind of angle that homes.com/CoStar/apartments.com is putting on Zillow. So this is going to put a lot of pressure on Zillow, on realtor.com, and on Redfin. And let's get back to Spruce Point and their analyst, Alex somebody, he'll put their name on, saying why Zillow, and if you're making your money off of Zillow, this probably is going to be concerning to you, is in trouble.
A super housing app. Ultimately, we think that's going to fail, and you don't need to take our word for it. They just retracted their 2025 goals from their latest investor presentation. In addition to that, they projected 45% EBITDA margins. They backed off a timeline for that. They're only at 22% EBITDA margin. So we think this is a company that is generally disappointed and will continue to disappoint in the future.
I mean, it also trades on sort of the outlook for the housing market, which is improving with the idea of lower interest rates. So that might be a tough one to fight on that front.
Correct, but there's a few nuances there. So their biggest customer is...
I want you to listen to this. Their biggest customer is, listen to this part.
Basically buy-side real estate brokers.
Buy-side real estate brokers.
And that the real estate brokerage industry is under some legal pressure. So the National Association of Realtors just lost a lawsuit that could decouple commissions between buying brokers and selling brokers. Ultimately, what that means is we think brokerage commissions are going to come down. The amount of capital to real estate brokers to pay for advertising on Zillow is going to be reduced, and that's ultimately going to pressure their revenue and earnings outlook.
All right, so what he's basically describing is kind of like an analogy of what we just said about commercial real is death spiral, right? Right, death spiral. And for Zillow and homes.com is, which is like, I don't know, I think on order of magnitude is like that CoStar is like 3 times the size of Zillow. Let me say that again. CoStar is like 3 times the size as Zillow. Now, Zillow could get acquired, and that would maybe boost its stock price, but that doesn't necessarily mean it boosts its efficacy for you to advertise on Zillow. And this is kind of what we've been talking about in the really big picture for real estate agents about your strategy on how you're going to be successful in the future. And I've said to this many, many times, and I want to tell you again, you need to start targeting sellers. Now more than ever, it's always made sense to represent sellers. To build your business based upon sellers has always been better, and now it's even going to be even better, right? Let me ask you a question. If you represent a buyer, do you get to put a yard sign in the buyer's yard? No. You only put lawn signs in sellers' yards. Whenever you get a listing, there's all sorts of spin-off marketing that comes with it. Gary Keller has always been famous for promoting that. So working with sellers has always been a good business model, and I think even in the future it's going to be even more so. This guy is literally just telling you that, right? And if you understand also, if you're just buying ads, whether it's on Zillow or billboards or grocery shop, supermarket carriages, I don't care how you're buying ads. If you're just buying ads and that's all you're doing, you're not building a brand that lasts when you stop advertising. Advertising is just a switch, which you turn on and off, right? And when you turn it off, it's off. When it's gone, it's gone. But if you're building a brand of affinity, a brand of people that know, like, and trust you, then that survives whether or not you're advertising or not. That builds upon itself. And I don't care whether you're building a community around bird watching, as you've heard me mention before, or local sports, or whatever the hell that happens to be. It does not have to be a real estate topic. When you build a community around a joint field of interest that you have, then you're building a brand. What actually doesn't take you any dollars to build. It's just time and effort connecting with people, like I'm connecting with you right now. And that is time and effort, which usually takes longer to kind of sink in, but lasts longer. And it's a career opportunity so that you're not just renting space on some Zillow page. See what I'm saying here? All right. So let's see if we have any other comments on that. I think we do. Let's see. Rob from Texas, I think from Texas, pay for advertising. If buyer's agent is uncoupled, Zillow is out of business. I think that's what the guy is saying. It's going to be challenging. If you have a listing, you have actually something to sell. Yes. Very good, Uber. Yeah, exactly. And I think the most important thing that you should be selling if you're an agent, what's the number one thing that you should be selling if you're an agent? And the answer is you are the product, right? Think about it like that. You are the product. Don't sell houses, sell you. Sell you. Gary Keller, Greg Robertson, who hosts that industry relation podcast, he has this post up at his blog, Vendor Alley. Gary Keller goes all in with Homes.com. Reports from the Keller Williams family reunion, which I do think is creepy, the whole family reunion aspect, is that Homes.com booth was crazy with agents signing up for membership. Why? Because Gary said so. Co-star Andy Florence was interviewed on the main stage at the event. Word is that Gary Keller himself told agents to sign up with It's Not a Cult, which then sent Keller Williams agents flocking to the Homes.com booth. This is pretty stunning to me. Keller has frequently rubbed many vendors the wrong way. So apparently Gary Keller has endorsed the Homes.com, and you're probably going to see a lot of Keller agents move away from Zillow. In the end, you're just renting from one landlord, and now you're renting from another landlord. Why would you do that? Build your own brand. And then you don't have to pay the landlord anymore. Come on, do you want to be a renter, or do you want to own your own brand? Is this a hard question? I don't think this is a hard question. All right, so the next thing, there's a controversy brewing. You might not be aware. Over at the Industry Relations podcast, I was incredibly disappointed with the Industry Relations podcast, which is hosted by Greg Robertson, who I just mentioned, and Rob Hahn. And I just got to ask, are they competent? Do they know how to do their job? Because on Wednesday, I plan my whole Wednesday around the new episode of Industry Relations Podcast, and they didn't publish one this week. I was shocked and outraged, and I just got to ask, do they have a competence problem? Are they good at their job? Because there was no mention that they weren't going to post an episode, and my Wednesday was entirely ruined. My Wednesday was awful. Are you good at your job? Is all I got to ask. And I know what you did the week before when you did a live stream about the DOJ letter on a Friday. You just recycled that, I'm pretty sure, into a Wednesday podcast. So we've actually been robbed of 2 episodes of Industry Relations. I just got to ask, are you good at your job? Because I think I've been robbed. I'm very, very upset, as you can tell, by the Industry Relations podcast. They failed to upload this Wednesday. I'm shocked. And my Wednesday has been ruined. My week has been ruined. All right. So enough with the comedy skit. Next up. I thought that was pretty funny. No explanation. The lawyers want their money, right? Since lawyers where's Warren Zevon when you need him? The settlement of $210 million, I believe it is. The Stitzer Burnett plaintiffs want a third of that money. They want a third of that money. They said they spent 100,000 hours of work, and they're looking for $82 million of the proposed settlement to be paid by Anywhere, Keller Williams, and Remax. That is interesting. Howard Hanna, which is not a big name here in beautiful Massachusetts, it's been dismissed from an important lawsuit called Batten 2. So this is the mother of all, but it's even bigger than Stitzer Burnett. And I believe it represents buyers, not sellers. Like Stitzer Burnett is sellers. This one's buyers, and it's a nationwide deal, probably going to be all consolidated. But Howard Hanna, they're out there. I don't know what they did, but they're doing it again. And they got out from under it. So they got dismissed. I also believe that Open Door got dismissed from the only bombshell, or the only copycat lawsuit that they were mentioned in. And so I don't even know why they would be mentioned to begin with. I don't understand why Open Door would be subject to one of these commission lawsuits. By the way, I do want to give you a movie recommendation because it has a strong aspect of, how do I want to say this? Let's see, we go here. Of lawyers and the money that they need, the lawfare that takes place, and how do you keep the lawfare going if you don't have any money? And so my movie recommendation to you this weekend is a great cast here: John Travolta, Robert Duvall, Howard Howard Macy, or whatever his name is, Kathleen Quinlan. I think great cat. Tony Soprano, right? James Gandolfini. A civil action. It's also a Boston movie, which obviously makes it good by definition. All right. So if you're in, it's called A Civil Action, based on a true story here in just north of Boston, about a Superfund site. Probably not going to be surprising to you that I actually, when I was a little kid, lived right across from a Superfund site. That kind of explains a lot, doesn't it? It's true. In Holbrook, Massachusetts, I lived like right across the street. Look it up. Yeah. Oh, that makes a lot of sense, Jack. All right. So any other comments? No? All right. It's been a great show. I've loved your comments today. We'll be back next week at some point, probably for the CP Lie on Tuesday. Until then, watch that movie. If you want to need another Boston movie, The Friends of Eddie Coyle, fantastic, A+. Until then, go make some money. Have a great weekend. Bye-bye. Thank you.